Okay, good afternoon, students. I want to do another exercise with you on video. The exercise I want to have a look at now is just after you've watched the explanatory video for the returns, for sales returns and purchase returns. I want to now have a look at an exercise looking at the sales and purchase returns. This exercise is exercise 8.14, so it's on page 202 in your green books. So I would suggest to keep your green book next to you on page 202. And you will see that this refers to sales returns. So we're going to see if we can use that example that we did for sales returns, if we can use that knowledge to record in the general ledger of this company all those sales returns. So obviously there will be some sales transactions and then dealing with the sales returns. You will see that what I did to make life a little bit easier for you, I color coded the debit and the credit so you can follow the colors to see where the debit and the credit is, and then pick up on the contra accounts when you take your time to go through this exercise. So I'm just going to run through some of the things in this exercise to show you the debits and the credits, and then you can take your time to go through the video when you do your studies. Okay, so let's see what the question wants from us. I say we must record the following transactions for April 1999 in the books of Patana Builders. I want to show you that there's two opening balances, so you'll see those first two bullets on page 202, exercise 8.14. There's two opening balance. There's an opening balance for capital of 14,000, and there's also an opening balance for building materials at 14,000. So on the first day of the month, we'll enter those two. Capital is obviously an equity account, so it increases on the credit side. So on the credit side of capital, you will see the opening balance for capital. And then building materials is an asset, increases on the debit side. So on the debit side of building material on the first day of the month, you see the two opening balances. So there was just two balances to start the accounts with. Okay, now we're going to go through the transactions. Some of them easy and straightforward. You've done a lot of them before. And then we're going to get to the returns a little bit later on. So on the 4th, we build a septic tank on credit for John's Plumbers and send them an invoice for 8262, and there's also cost of materials of 5,000. So we made a sale. There's an invoice involved, so we know we have a credit sale, and there's a cost price. Because we're making a sale, we need to record the cost of the sale as well. So let's look at the sale portion first. What do? We need to identify the two accounts. I made a sale, so one account will be contract sales. It's a credit sale, so I can't use the bank account. I have to use accounts receivable. So I have accounts receivable, my asset account, and contract sales, my owner's equity account, because it's an income. Accounts receivable increase, so on the debit side of accounts receivable, sales figure is 8262. The account that goes with that we now know is contract sales. We've done plenty of sales. So on the credit side of contract sales, accounts receivable will be the contra account 8262. We also have to record the cost of sales. We know cost of sales goes with building material. Debit cost of sales, credit building material. So on the debit side of cost of sales, the cost price was 5,000 for building materials. And on the credit side of building materials, credit 5,000. One debit, one credit. Why on the credit side of materials? I completed the job. I used the material. So therefore, the material came out of my storeroom. It must go down. The asset decreases on the credit side. And then cost of sales is an expense, minus side of owner's equity, so on the debit side. Okay, the next transaction is on the 8th. On the 8th, there's another sale with the cost of sale, another credit sale. So the same accounts will be affected. You can go and follow the colors. There's the sale of 4,000, accounts receivable in contract sales. So the same accounts affected, and the same with the cost of sales, the 2,500 and 2,500. Nothing new there. Same as the one I just did. So you can go and have a look at that one. Then on the 10th, we have our first return. It says issued credit note for 450 to John Plumbers for reinstalling a manhole cover removed elsewhere instead of a new one. So now we have our first return, a sale return. So now we need to take this return out of the accounts receivable. He's not going to pay for that. It was a credit transaction that was done with him on the 4th. a credit sale that have happened, so it's currently sitting in accounts receivable. We want to take it out of accounts receivable and take it to returns. So on the 10th, we credit accounts receivable. We make the accounts receivable less. We decrease it on the credit side with the 450. And we take it to the sales returns account, debit sales returns with the 450. So credit accounts receivable, credit sale, and take it to sales returns, debit sales returns with 450. Okay, then the 13th is another sale. You can go through that one. You'll find the colors. I've connected them for you. 18th is a sundry sale. We sold off some old material. You've done one of those before as well. So you can have a look at the sundry sale, a credit sale again. So debit accounts receivable and credit the sundry sale. You've done that as well. So I just want to have a look at the last two, the two returns. On the 22nd, we received a debit note together with damaged material from T20, and we issue a credit note for 150. So we're going to allow him a return of 150. Now, T20 was a person who bought from us on the 18th, so he owes us the 1110 that is sitting over there. Now we return some of this goods, so he's not going to pay the full amount. There's a return, so we're going to take it out of the accounts receivable account, credit accounts receivable with the 150. It's a sales return, so therefore debit sales returns with the 150. And then lastly, another reduction in the price on the 25th, this time for Z-Tucker of 350. So another return, same entry. Take it out of the debt account. He's not going to pay for it, so the debt goes down. Credit accounts receivable with the 350 for sales returns. Debit sales returns. Another credit sale return that have taken place. So that is basically just to show you the returns. You will then balance all of the accounts. You can go through the balancing, and once you've balanced all the accounts, there's all the totals. I will put this on the Moodle site for you to go and look at as a normal document as well. Then you will be asked to do the trial balance. That is what the trial balance will look like, and you will see that you are in balance. The final balances, there was 3 B accounts, capital, building materials, and accounts receivable. And there was 4 N accounts, contract sales, cost of sales, sundry sales, and then the returns that happened. So we just take the final balances like you've done before when you did the trial balance, put them in the balance sheet section and the nominal section, and you should be in balance.